Welcome back to Swim Lessons, everyone. It is time to get technical. For that, we welcome in Clint Cowles. Welcome to the show, Clint.
Hey, thanks, Kevin. Always good to be here with you. All right, so today we're going to break down the MacD study. This is one of the most popular technical analysis studies that there is. So MacD, that stands for Moving Average Convergence Divergence. It's an oscillator that is widely used for assessment of trending characteristics of a security, but it's really just calculated by the difference between two different moving averages. So the default periods on that are going to be the 12 and 26 period moving averages. And yeah, it's just plotting the difference in between where those moving averages actually would be on the chart and placing a line down on a lower study down here below. So crossovers of the MacD plot can be trade signals. So there's the MacD line, then there's also the signal line, which is just a moving average of the MacD line. So a lot of moving averages in there. The MacD line itself is just the difference between two moving averages, and then the signal line is a moving average of that line. But when the MacD line itself crosses over the signal line, that can create different trading signals. So if we take a look at where it is right here, that also plots a histogram. So the difference between the MacD line itself and its signal line is going to plot that histogram right down here. So those trading signals a lot of times will come up when we get a crossover from the MacD line of its signal line, and that is represented by the histogram actually crossing over 0. So as far as what these trade signals are, when to look for them. When we have the two lines, or the MacD line itself, when that's above 0, that's where we can be looking for bullish trades. If that MacD line is below 0, that's when we'd be looking for bearish trades. And the signals then are coming off of those different crossovers. So we've got a chart of Lockheed Martin up here, 1-year daily chart. And right here is a good example of one of those bullish trading signals, because we have the MacD line crossing back above its signal line, yet it's also above the 0 line here. So we want to be careful with that. So some of those trading signals, when you get the MacD line crossing above the signal line, if they are below the 0 line, kind of like they were right here, then the longer term trend there is still in more of a bearish position. So I would like to ignore those trading signals. However, if it's above the 0 line and then we get that cross above, then that's saying we've got a bullish signal in a bullish environment. So that would be good for potentially putting on a bullish trade. So another thing that is very helpful from the MacD is to look at divergences from price. And we have a great example of that right here over the last couple of months. We can see as price has just been rallying up, we made its all-time high here at 322. At that same time, we had a lower high right here on the MacD. So that was telling us that even though we made it up to a brand new high, there was weakened momentum behind that. So we had a higher probability that we may have a pullback from that. And we've kind of seen that happen here right now, because we've got another big divergence that just happened on this recent high. Well, and actually that one is not a divergence, it's more of a confirmation, because we did not make it up to a new high here. But you can see how much lower the momentum is just off of this last little rally up that we just made. So certainly some things to be watching as far as the momentum in relation to the actual price action of whatever stock you happen to be looking at.
So, Clint, there are a lot of similarities between the MacD and the relative strength index from yesterday, right? Compare these two. Tell me, what are the differences between these two?
Yeah, great point. So, like we were looking at the divergences and, kind of the position to see whether we're in a bullish or a bearish environment there. A lot of that is the same, and looking for those divergences, the analysis off of that is very similar as well. As far as how these are different, one is just the actual construction of how these are calculated, how they're put together, this using moving average, that using just actually strength of the moves over the last 14 days. One of the other main differences here with the MacD, though, is this is not range bound. The RSI is between 0 and 100, so it does have those specific levels. There's no limit to how far this can go. So as fast as the price might start moving, those moving averages can diverge farther and farther away from each other and get much more extreme readings up here than you would ever be able to get on the RSI, because there is a limit to where it can go.
All right, would there be a situation, Clint, where you would adjust the lengths used to calculate the MacD line?
So you can do that if once you're really comfortable with the MacD and you use it quite a bit and you understand the signals that it's giving you. If you want to mess around with the time frames there, you certainly can do that. However, until you're really comfortable with it, I would probably say if you're looking to change the time frame, just change the aggregation period on your chart. So you could just move it to a weekly chart as opposed to a daily chart, and then that'll give you more of your long-term signals as opposed to just messing around with the periods of the moving averages themselves. So one other thing we can do is for these crossover signals, we can add another study onto the chart here that will highlight those signals. So another one very similar to what we were doing on the RSI yesterday. However, that one for the MacD is actually a brand new study. So I'm going to go ahead and bring that up here. And this one is called the MacD histogram crossover. So this one is actually going to, it's right here, histogram crossover. We'll go ahead and add that. It's going to put the arrows on the price chart itself. So when we were looking at the RSI, it was putting the arrows down on the study. This one does put it actually on the price chart here and highlight when we're getting those different crossovers. So whenever we get a cross of the MacD line below the signal line, we're going to get that down arrow. And when it goes the other way around, it's another setting that we can add in to put in the arrows on the upside.
All right, thank you, Clint. Coming up, Clint Cowell sticks around as we plunge into a Southwest Airlines trade example. Gonna trade some love. Stay tuned. Swim lessons will be back in 2 minutes.
If you're looking for an edge, consider education. TD Ameritrade's Education Center has practical knowledge you can use right away.
Beta is a measure of volatility. It's calculated by looking at an asset's standard deviation relative to a benchmark. Investors use beta to estimate how a stock may respond to market moves. This can be useful in assessing risk. A beta of 1 means the investment will likely move in step with the benchmark. Less than 1 and the investment tends to be less volatile. And a beta greater than 1 can mean more volatility. So, if stock XYZ has a beta of 0.7 against the S&P 500 and the index increases by 10%, stock XYZ should theoretically increase by 7%. Keep in mind that beta doesn't account for changes in a stock's fundamentals and that past behavior may not predict future moves.
Learn the basics and beyond with TD Ameritrade's award-winning Education Center.
A child arrived just the other day. He came to the world in the usual way, but there were planes to catch and bills to pay. So I moved my meat and saw him walk that day. He was talking for I knew it, and as he grew, he'd say, I'm gonna be like you, Dad. You know I'm gonna be like you. And the cat's in the cradle and the silver spoon. Little boy blue and the man on the moon.
See, that's funny. I thought you traded options.
I'm not really a Wall Street guy.
What's the hesitation?
It just feels too complicated, you know?
Well, share it first, but JJ can help you with that. JJ, will you break it down for this gentleman?
Hey, Ian. You know, at TD Ameritrade, we can walk you through your options trade step by step until you're comfortable.
I could be up for that.
That's taking options trading from Wall Street to Main Street.
Hey, guys, want to play some pool?
I'm not really a pool guy.
What's the hesitation?
It's just complicated.
Step-by-step options trading support from TD Ameritrade.
Welcome back to Swim Lessons, everybody. I'm Kevin Hinks, joined again by Clint Cowles. Thanks for sticking around, Clint. We're going to talk about some love, some Southwest Airlines.
All right, sounds good. Well, to start out, let's take a look at the chart and see where that is going as far as the trend. So what I've got up here at first is a 3-year weekly chart. And I wanted to bring up a little bit more time than just 1 year so we can see how that was going. For a couple of years, we had just a pretty sideways movement, but then towards the end of 2016, we started getting some legs along with pretty much the rest of the market as well. But we can see we had a very solid run right up here, and then now a little bit more of a consolidation. So now let's go back to our regular 1-year daily chart. The beginning of this last year started quite wonderfully, had about a 50% rise up, and then we had a draw back down, and now we're starting to rally back up again. So where we're sitting right now, off of the low that happened here in September, we had a nice run up, another pullback, and now we're just continuing to launch back up off of that. I also have this other trend line here that connected the low from the previous chart from a year before, and it also connected these two lows that have just come up. So we did get multiple bounces off of that trend line, and now still heading higher. So let's take a look at a couple of the studies that we have up here. So first off, we've got 3 different moving averages, my 20, 50, and 200 period moving average. Those are in the exact positions that we would like to see for a bullish move, because we've got price wall up on top, then the 20 period, then the 50 period, then the 200 period moving average here. So that is exactly where we like to see those, with the shorter term ones up on top, closer to price action, as opposed to the longer ones a little bit below that. So, and we've been talking about the MacD. So let's take a look at the MacD down here below. Again, like we were saying, the bullish situation on the MacD that we want to see is, number one, having the MacD line above 0, and then also having it crossed above its signal line. We can see both of those have happened here. We've got a bunch of green bars on the MacD histogram, and our MacD line itself is heading back up higher here. We can also see we did get the confirmation on the MacD off of this last low. So we had a higher low here in the price, and we also had a higher low here in the MacD, so that's good confirmation. And now that we've moved up to a higher high in the price, our MacD is at its highest point of the entire year as well. So all of that is pointing to a fairly bullish move. So if we look at how far might that go, if we're looking for a potential resistance point in the price, that can be kind of difficult to come by when we're at all-time highs, because when we're really looking for support and resistance levels, the first thing we look for is past price action. Where has this traded in the past? What else, or what other levels has it respected in the past? We don't have that option right now, other than basically where we're sitting right now, because it is pretty much exactly at its all-time high. But another tool that we can use then to project a resistance level up higher than where it's ever traded is our Fibonacci retracements, or not retracements, extensions, I'm sorry. So in the drawings, we choose Fibonacci extensions, and I measured this last swing move up, and then I want to project that off of the low. So there are a couple of different levels we can look at. First is just the 61.8% extension, and the next one being the 100% extension. Those have already been reached. So what we're looking for now is that 161.8% extension, which we have to bring our price down here a little bit. And that's going to come in right here at just below $69. So this is going to continue. That would be a potential resistance point that we can project based off of that Fibonacci extension.
So 60. So that is somewhat lining up. It's close to lining up with the strikes that I have chosen. And we have an iron condor chosen in Southwest Airlines today that we're going to work on. But boy, this is a